Assalamu alaikum and welcome to Educare. So we are starting the practice session for F6 ACCA. So one of the important tip is that first to read the requirement of the question and then read the scenario. So while doing this, you are able to understand, your mind is able to understand what is the information you have to extract from the scenario. So that will also save your time, and particularly in long question this is a very useful exercise for problem solving. So let's start the first question. Tick the appropriate box to show which of the following investment will generate taxable income and which will generate exempt income. So here they are testing about your knowledge of exempt income and taxable income. Seth has made the following number of investment. First, £400 in share in the company he works for. So this investment is taxable. Second, £1,000 in an individual saving account. You know that any amount which is deposited into individual saving account up to 20,000 is exempt. So this is 1,000 and deposited into individual saving account. That is why it is exempt. Next is £800 in a national saving and investment account and 500 purchasing a national saving and investment certificate. So remember that this point usually confuses the student. Remember this point that your investment in NS&I account is taxable and your investment for purchasing NS&I certificate is exempt. This is the point to remember. Now the requirement of the next question is, what amount of personal allowance will Martina be entitled for the tax year 22-23? So it requires your knowledge how to adjust the personal allowance. Here they have given the scenario. Martina is a self-employed and for the year ended 5th April 23, her trading profit was 1,11,900. During the tax year 22-23, Martina made a gift aid donation of 800 gross to a national charity. So remember one thing, for the adjustment of personal allowance, you need to calculate adjusted net income. And how to calculate adjusted net income? The rule is, from net income, you have to subtract the gross gift aid donation and gross personal pension contribution. So here we have been given the gift aid donation. So for the calculation of adjusted net income, what we have to do, our total income is 1,11,900 and from this we have to deduct 800 which is gross gift aid donation. So our adjusted net income will be 1,11,100. So now step 1 is, after calculating adjusted net income, for the adjustment of personal allowance, step 1 is you have to identify how much of your adjusted net income is in excess of 1 lakh. So this is 11,100. Step 2, you have to find 50% of 11,100, or you can say you can divide this by 2. So you will get an amount of 5,550. So this amount which we have calculated in step 2 would be reduced from personal allowance of 12,570. So after reducing this, it would be 7,020. So B is a right option for us. In the next question, again we have been asked what amount of personal allowance INS entitled for to the tax year 22-23. So again we have to apply the rule of personal allowance. Here he is a sole trader. She had a taxable trading income of 1,06,800 and received a dividend income of 1,500. So by adding 1,500 into 1,06,000, 800, you will get the net income of 1,08,300. So this is Ayan's net income. For the calculation of adjusted net income, we have to deduct the gift aid donation of 2,000 gross. So when we have deducted 2,000, we will get an amount of 1,06,300, which is said to be adjusted net income. Now we have to follow again the stepwise approach. How much of this income is in excess of 1 lakh? This is 6,300. Make it half. This is 3,150, and subtract this 3,150 from 12,570 of personal allowance. So this will be 9,420. So both of these questions require same knowledge about personal allowance adjustment. Next question, what is the Wayne's income tax liability for the tax year 22-23? Here Gina and Wayne are a married couple. In the tax year 22-23, Gina had a salary of 5,000 and Wayne had property income of 40,650. They have made an election to transfer the fixed amount of personal allowance from Gina to Wayne. So the question asks us to calculate the Wayne's income tax liability. So here the receiver of marriage allowance is Wayne. So first we have to calculate what is the taxable income for Wayne. It is 40,650 minus 12,570 of allowance. So it will be 40,650 minus 12,570, and this will give you 28,080. So his income is 28,080, and on this income he has to pay tax at the rate of 20%. So this will be 5,660. So this is the tax he has to pay. But as he received the marriage allowance, for the receiver of marriage allowance, there is a exact amount concession in the tax liability, which is 252. And how it has been calculated? It is said to be the marriage allowance for the current year is 1260, and 20% of 1260 will be given as tax concession to the receiver. So he has to pay tax of 5,364 is the amount of tax liability for Wayne. Now next question, tick the appropriate box to show which of the following items of expenditure are deductible in the calculation of individual taxable income. Right? So important one. First one, a contribution into a personal pension scheme. Remember, whatever is the contribution to the personal pension scheme, the gross amount of this will extend the basic rate band. It will not be deducted from your income to get the taxable income. Right? So it is not deductible. Next is a charitable gift aid donation. Same is the case of charitable gift aid donation. Whatever amount of charitable gift aid donation is, it will extend the basic rate band. It will not be deducted from your income to get the taxable income. Next is a contribution into an employer's occupational pension scheme. So this is mentioned in the 6th chapter that the contribution to employer's occupational scheme is considered as relief against total income, and it will be deducted from total income to calculate the net income. Next is a charitable donation made under the payroll deduction scheme. So this is also the deduction available, and it has been mentioned in the chapter 5 of employment income. Next, Oleaid is provided with van by her employer on 6 April 22, which he uses 60% for business and 40% for private purpose during the tax year 22-23. The van has a list price of 30,000, CO2 emission 150 grams per kilometer. Oleaid's employer also pays for fuel used on private journey in the van. So you have to calculate the total van and van fuel benefit for the tax year 22-23. So remember, if the private use is insignificant, then no benefit will be added. But here the private use is not said to be insignificant, so we have to record such benefit, and rates will be given to you in your exam, so there is no need to learn them. The benefit to be recorded for van is 3600, and for the fuel benefit, the benchmark amount for tax year 22-23 in accordance with Finance Act is 688. Next, if Ram has been employed for many years and has also recently become a partner in a partnership, he is in process of completing his tax return and has asked your advice regarding the interest payment he has made. Identify by ticking the appropriate box whether his interest payment represent qualifying interest and are deductible from his total income or are not qualifying. So you have to apply the rules for the qualifying interest payment. If the purpose qualify, then such interest payment will be qualifying interest. So these are the qualifying purposes. First, loan to buy plant and machinery for use in partnership or employment. If you have taken loan to buy any plant and machinery to be used in his partnership business or employment, then it is a qualifying purpose. Second, loan to invest in partnership, either in the form of loan or capital. Third, loan to buy interest in employee control company, and loan to invest in cooperatives. So these are the qualifying purposes. First, interest paid on a loan he incurred to purchase a laptop for use in his employment. So as he has taken loan to purchase a laptop to be used in his employment, this is a qualifying purpose, so payment is qualifying interest. Second, interest paid on mortgage for his private residence. So as loan has taken for the private residence, this is not the qualifying purpose. So interest payment is also not qualifying interest payment. Third, interest paid on an amount he borrowed to finance the acquisition of 2000 shares in a quoted company. So again, this is not a qualifying purpose. So interest payment is also not qualifying payment. Fourth, interest paid on a loan he took to invest capital in a partnership in order to become a partner. So he has taken loan to invest in partnership. This is the qualifying purpose, so interest payment is also said to be qualifying interest payment. Next is about residential status. Their question is, for the first 2 tax years after leaving UK, what is the maximum number of ties which Inzo could keep with the UK without being treated as resident in the UK? So we have to understand how many ties he needed in order to be considered as non-resident. So first we look at the scenario. Inzo is planning to leave the UK to live overseas, having always previously been resident in the UK. He will not automatically be treated as either resident or non-resident. Enzo has several ties with the UK and will need to visit the UK for 60 days each tax year. However, he wants to be not resident after he leaves the UK. So here you identify that this person Enzo lived in UK for this tax year for 60 days. So he lies here. So as he was previously resident, he needs 3 UK ties in order to be considered as resident. He needs 3 UK ties in order to be considered as resident. But as per question, we have been asked what is the maximum number of ties which Enzo could keep with the UK without being treated as resident. So if he needs 3 ties in order to be considered as resident, so maximum he will need 2 ties in order to be considered as non-resident. So your answer is C. Hannah was UK resident. Again, about the residential status, the question is what is the maximum number of days which Hannah can spend in UK and be treated as automatically non-resident. So the statement Hannah was UK resident in the tax year 21-22 means she was previously resident. He worked full time in Egypt in the tax year 22-23. So now we have to mention how many days he can spend in UK to be treated as automatically non-resident. So as he is working full time overseas, this is the automatic non-UK resident test. In accordance with this, this particular person work full time overseas. So if he is working full time overseas and stay less than 91 days, he can be said to be automatically non-resident person. So less than 91 days means 90 days. So if he spent 90 days in UK, he will be considered as automatically non-resident person. Now next question, Bob spent 37 days traveling in UK during the tax year 22-23. He has never been resident in the UK prior to the tax year 22-23. Min arrived in UK from Vietnam on 10th November 22 to work full time in UK. Min did not work full time in Vietnam before arriving in UK. Identify by ticking the appropriate box who is treated to be UK resident in the tax year 22-23. As Bao was not UK resident in the previous year and his stay in UK in the current year is 37 days, so it means that he is automatically non-resident person because his stay is less than 46 days and has not been UK resident in any of the previous 3 tax years. So Bao is said to be non-resident. While Min arrived, and although her stay from 10th November 22 to 5th April 23, this is the period of 145 almost days. So her period is less than 183 days, but as she is working full time in UK, so that is why she will be considered as resident person. Now next question, which of the following will not cause Harper to be treated as automatically UK resident for the tax year 22-23? So here we need to carefully consider each and every circumstances because our question is which of the following will not cause Harper to be treated as automatically resident. First, Harper spending 192 days. If he is spending more than 183 days, he is said to be resident person. We want to know not cause Harper to be treated as automatically UK resident. Second point, Harper renting a house in the UK to live in and then occupying it as her only home. If a individual has his only home in UK, he is again considered to be resident person. Third, C point, Harper accepting a 15-month contract for a full-time job in UK. If a person is working full-time in UK, he is also said to be automatic resident person. Now the option would be D, but we will consider it. Harper's husband living in UK throughout the tax year and Harper staying with him when she visits the UK. So this is the point where she will not be considered as automatically resident person. Next, during the tax year 22-23, Petra had trading income of 56,500 and she paid an annual charitable donation of 400 under the gift aid scheme. Remember here one thing, this is said to be net amount. If the individual person is paying something regarding gift aid scheme, this amount would be considered net and it will be gross up by dividing it by 80%. She received child benefit 1134 during the tax year 22-23 in respect of her son Costas. Petra had no other income for the tax year 22-23. What child benefit income charge, if any, will be added to Petra's income tax liability 22-23? So remember one point, the adjustment in the personal allowance, and for the calculation of child benefit income tax charge, we have to consider adjusted net income. And adjusted net income can be calculated by subtracting gross gifted donation, which would be 500. If you divide 400 by the 80%, you will get the gross amount of gifted donation, and this will be 500. So to find out the adjusted net income, you have to subtract gross gift aid donation from net income and you will get the figure of 56,000. Now remember a rule about the child benefit charge. If the adjusted net income is in between 50,000 and 60,000, then there will be adjustment or calculation of child benefit charge is needed. So the easy way I have mentioned that you have to identify the portion of adjusted net income in excess of 56,000. So this would be 6,000. Now you have to divide this 6,000 by 100 and you will get the 60. So this is the percentage of child benefit that should be recorded as child benefit charge. So for child benefit 1134, you have to take a percentage of 60%. This will be 680. So we have to round it down and it will be recorded as 680. Next, Menon purchased 2 lakh nominal value gilts paying interest at 1% for 2,11,000 on 1st September 21. Interest is payable half yearly on 30th June and 31st December. He sold the gilts on 1st December 2022 for 2,13,000 including accrued interest. You have to calculate how much to be included in the saving income in respect of gilts in the tax year 22-23. Here you need to understand what is the date of purchase, that is 1st September 21 and date of sale is 1st December 22. You are receiving interest on 30 June and 31st December. So in the tax year 22-23, you have received interest on 30th June 22 and 31st December, but before that you have sold that investment. So you will not receive interest on 31st December. First, you have received interest on 30th June 2022. The face value is 2 lakh multiplied by 1% multiplied by 6 by 12. So it is the interest of 1000. Now from 1st July 2022 to 30th November date of sale, Menon has hold this investment for the period of July, August, September, October, November, for the period of 5 months. So in accordance with accrued interest concept, he is entitled to receive that interest and record it as his income. So here we need to calculate 5 months of interest in this regard. So this will be 833. So the total interest to be recorded as Menon's saving income in respect of gilts in the tax year is 1833. Number 14. Identify by ticking the appropriate box whether or not the following individuals are automatically non-resident in UK. Eric, who was never previously been resident in UK, was in UK for 40 days during the tax year 22-23. So Eric is automatically non-resident in the UK, right? This is as he was not previously been resident in UK and his stay is for less than 40 days, he is considered to be automatically non-resident person. Fran, who was resident in UK for the 2 tax year prior to the tax year 22-23, was in UK for 18 days in the tax year 22-23. No, because as he was previously resident, so her stay, if less than 16 days, will qualify him to be considered as automatic non-resident person. Now Ahmed purchased 10,000 nominal value gilts, paying interest at 2% for 11,000 on 1st June. So date to be considered 2% interest on 1st June 22. Interest is payable half yearly on 31st March and 30th September. He sold the gilts on 28th February 23 for 11,400. How much will Ahmed include in saving income in respect of gilts in the tax year 22-23? So remember, the tax year starts on 6th April 22 and ends on 5th April 23. So he has purchased that investment on 1st June 22 and sold this investment on 28th February 23. So he has purchased his investment in the current tax year and sold also in the current tax year. So we just need to identify the number of months he holds that investment, and we have to record in accordance with accrued concept the interest on this period. So it is June, July, August, September, October, November, December, January, February. So he has hold investment for the 9 months period. So on 10,000 investment, 2% interest for the 9 months period is our answer. So this will be 150. So option is A. Next, identify by ticking the appropriate box the treatment of each of the following forms of saving income. So first is NSNI investment account interest. This is taxable. Gilt edge security interest, taxable, and NSNI saving certificate interest, that is exempt income. So this is the main point to remember, that income from NS&I certificate is exempt. Next, David received the following income for the tax year 22-23. Property income 21,250, interest from government securities 2,400 and dividend 1,250. What is David's total income tax liability? So we need to consider that property income is said to be non-saving income. This is 21,150. Interest from UK securities is saving income 2,400 and dividend is said to be 1,250. So first we have to reduce the non-saving income by subtracting personal allowance. So it is 8,580. And the total income would be approximately, this would be around 12,000. So first we need to consider the tax liability on the non-saving income. This is 8,580 at the rate of 20%. So this will be 1,716. Next we need to consider that saving income, total income is as lies in the basic rate band. 1,000 of your saving income will be taxed at 0%. Second, remaining 1,400 would be taxed at 20% and this would be 280. While in case of dividend, first 2,000 of dividend is always exempt. So this is 1,250. It will be recorded as exempt at 0%. So the total tax liability would be 1,996. Option is A. Next, what is the Harrison's income tax liability for the tax year 22-23? As his only income is dividend income 56,950. So first of all we have to deduct the personal allowance from 56,950. So it would be 56,950 minus 12,570. So this is 44,380. Remember one thing, first 2,000 of your dividend income will be exempt. So as the total income lies on a higher rate band, we need to consider that 37,700, the basic rate band, we have already been used 2,000 of this limit. Remaining 35,700 of your dividend income will be taxed at 8.75%. Remember, rate for dividend incomes are different. So 35,700 multiplied by 0.875, this will give you 3,123. While remaining income, that is above the basic rate band, 44,380 total income, remaining 6,680 of your income will be taxed at 33.75%. So this will be 2,255. In fact, we should have round this off. So it will be 3,123 instead of 3.75, 3,124. So the total tax liability would be 9,735. This is the total tax liability. Next, since 6 April, Nicholas has let out an unfurnished freehold office building. On that date, the tenant paid a premium of 82,000 for the grant of a 15-year lease. So, how much premium is taxable? So, remember a simple rule, 82,000 multiplied by 51 minus lease period divided by 50. So, this will be the formula to calculate the amount taxable in respect of premium received by the landlord. So, it would be 82,000 multiplied by 36 divided by 50. So, it will be 59,040. So, option is A. Next, Amber is employment earning an annual salary of 55,000. Her only other income is bank interest of 3,000. She received child benefit of 1885 during the tax year 22-23. Select Amber's child benefit tax charge and method of collection for the tax year 22-23 by selecting an appropriate box in the table below. So, first we have to calculate the child benefit tax charge. The total income of this person Amber is 58,000. How much of his income is in excess of 50,000? This is the first step for the calculation of child benefit tax charge. So, 8,000 is the income, adjusted income, net income, which is in excess of 50,000. So, we have to divide this by 100 and this will be the 80%. So, we have to consider 80% of 1885. So, that will be 377, 80%, 1508. So, 1508 is your answer, and that person has to submit his tax or method of collection is self assessment for him. So, A would be your answer.